Hey, welcome. This is Mikhail Jessen, and in this video, we're going to talk about how to build credit with top tier lenders so you can really position yourself and position your credit where lenders are starting to chase you because of who you've built relationships with. This not only is going to help you build your fundability rating, but it's also going to help you get more capital to grow your business. So let's dive right in. My name's Mikhail Jessen. Here I am on CNBC's Fast Money TV studios for Fast Money New York in New York City, which was a fun experience. But what I'm going to cover with you today is tiering of lenders and what the tiering system really means, how to understand it from a borrower's perspective, and how to also evaluate lenders based on what tier they are in. So you can ultimately decide what lenders I need to build relationships with, so that way I build my credit to the strongest position possible, which will only give you more options and more leverage as you grow yourself, you grow your credit, you grow your business. But most importantly, you have lenders chasing you, and you're not going to have to spend any more time, hoping the lenders approve you for a car loan or a credit card or even a mortgage. I'm going to show you how to follow this system, follow this structure. And this is something that I work with each and every one of my clients on. I'm also going to show you how to become tier one yourself. And then this will ultimately help you grow your fund ability. Now, the definition of tier one, there's actually two definitions. The first definition is how the banks will look at you and I as borrowers. And the second definition is how we look at them as lenders. The banks evaluate us based on the depth of our credit and our credit score. So the higher our credit score, the stronger our credit profiles, the lower tier we are. And to the contrary, the lower the scores we have, the worse our credit profile is, the higher tier we are. And it's really like a weighting scale of risk factors. The lower your score, the higher risk you are. The higher your score, the lower risk you are. Now, on the flip side, for the way we look at banks, different banks are looked at differently by each other. So they kind of have their own little hangout group. They have their own little cliques of who they take seriously and who they do not take seriously. And so if you remember when you first started building your credit, you probably got offers from people like Bank One or Credit One Bank. And these are typically the lenders that you have to build credit with to start with. I did the same thing. I remember Credit One Bank gave me like $800, and I think they might have charged me like $200 for an annual fee just to have that account. But when you don't have any other options, that's who you have to go with to start with. So the goal really is to help you understand what tiering, what lenders are in which tiers, how to use each tier effectively and productively to help you grow your credit, and then how to get to the ultimate level, which is tier one. So you have the best banks in your pocket, and which will allow you to then have your credit work harder for you than you work for your credit. Okay. And then just to simplify this too, obviously the lower tier you are because of your higher scores, you get the best rates. When you have great credit, it affects everything from your insurance rates to the interest rates you pay on credit cards, the rates you pay on your auto loans, the terms you get on your auto loans, the rates you get, and the preferability you are as a client for your mortgage loans. It affects almost everything. If you're trying to buy a house or rent a house, it affects everything. The better credit you have, the more options you have. So do your best to put yourself in the best position possible. And if you're somebody that's just starting out and building credit for the first time, great. This is going to help you a lot. If you have great credit already, awesome. This might be a refresher for you. And if you were like me at one point and you messed up a few things on your credit, really because I didn't have the financial literacy at a young age, I had to go back and reverse engineer. And I had to build my credit back up to the point where it is now in the high 700s and teetering close to 800, but I'm not quite there yet. Here is the kind of the scale, the way the lenders will look at us. If we're over 720, we're at tier one. And as we drop below that, you can see the tiers go all the way down to tier one to tier 8. Now, how to become tier one? Now, if you already have, 800 credit scores, you've got accounts with some of the strongest lenders out there, awesome. But if you're at 750 or 800, but you're only banking with Capital One or Credit One or maybe even Discover, you need to pay attention to this because you really need to start moving towards those higher levels of banking that will help add strength and put some leverage in your pocket too. If you're not a tier one person yet, that's okay. Most people are not, and I'm still growing mine. I have tier one lender accounts with my credit, but I'm only 30. And so, I've really realistically only had about 11 to 12 years of credit history. Once you start getting into 20s and 30s, that's when you really have such a strong profile that can lend credibility for you to lenders when you go and apply for credit. But what can you really do to help build your credit? Credit takes time to build. We all know that. And it takes disciplined, methodical patience, and good stewardship to manage and grow your credit. What can you do? Well, pay your bills on time. Okay. If you have credit card payments and you can't pay them off in full, make more than the minimum payment and pay a week early. These simple two things, if you pay it early and you give them more than what they're asking for, that will go a long way when it comes time for you to ask for a credit limit increase. If you're making payments that might not be 30 days late, but you're paying after the due date and you make the minimum payment, the second you pay that card off, they're going to lower your credit limit. It's really just smart principles and smart money management techniques and strategies that if you deploy can really work to your benefit. But if you ignore them and you're in denial of these strategies, you're going to really hurt your credit. It's going to set you back. Reduce your balances. This is another thing. If you're overutilized on your credit cards, bring those balances down below 30%. Anytime they get over 30%, it really starts to bring that score down. And then don't apply for too much credit. You don't want too many inquiries on your credit report in a short period of time. Most lenders will look at you, and underwriters will look at you and perceive you as somebody who is struggling and trying to supplement their income with credit and loans. And this may not be the truth for you, but this is how underwriters look at you. So you need to understand this. And then you also want to periodically check your credit report. I watch mine monthly. I even look at it weekly. Anytime something updates, you want to pay attention to it. Now, lenders to work with to build tier one credit so you can get more credit. So you can get more funding for your business. This will allow you to get more credit for yourself personally. You'll qualify for a mortgage easier. You'll qualify for auto loans easier. Credit cards will be a breeze. And then if you're running and building companies, which is obviously who my market is, this is going to help you utilize and leverage your personal credit to really start to raise money for your business that doesn't show up on your personal credit. So there's 3 tiers of lenders, and I'm going to cover that with you today in terms of how we view lenders, the lenders you want to build relationships with, and the tiers of those lenders. And I'm not going to give you the specific lenders' names, but I'm going to help categorize each one. And this is something that I will work with you one-on-one. So when you become a client of mine, or you even just have a conversation with us, I'm going to help you understand what level of tiering you're at within your credit and what you can really do to put yourself in a better position. That way, you have more options, you grow your credit, you can fund more of your business or your personal life. It just overall makes life a lot easier when you're not paying high interest rates. The first set that we look at is our tier 3 lenders. And I'm going to give you a couple names here just to help you guys identify with who these people are. But this is really your initial credit building offers. These are the banks that give you the offers initially when you're building your credit or you're rebuilding your credit. These are lenders like Credit One Bank, Bank One, Capital One, even Discover. Now, Discover and Capital One are not bad lenders. They have some really good entry-level products that will give you $500 to start with. And then you need to start putting that money to work. Use it to pay some of your bills. Use it to pay your cell phone bill or your utility bills. But make sure you pay those off. And if you build positive payment history for 12, 18, 24 months, you may even get a credit limit increase on those. Well, then you're ready for more of the tier 2 lenders. And these are lenders that are going to really help you start to add strength to your credit. This is the growth stage of your credit. And like I said, tier 3 is not bad, but you don't want to stay with them. You don't want to just rely on them. I've seen people that have 20 years of credit history and they're still working with these lenders. And it's really because they do not know. So this next stage, which once again, when you have a conversation with me, we'll cover some of these lenders with you. But just for example, this is like Bank of America, Wells Fargo. American Express has some entry-level tier 2 products, not their exclusive invite-only products, but more their lower-level tier 2s. These are the lenders that you'll want to establish a relationship with as you build your personal credit. The commercial market and the personal market is very different. Okay, so we're not talking about business credit. We're talking about personal credit. If your credit's not strong enough to qualify or you're still in the building process, these tier 2 lenders are going to be who you then get approved with next. So you'll apply with them. You might get a small credit limit, accept it, and then start to use those accounts. Use them, pay your bills, pay them off. Ask for a credit limit increase. Once you've done that, well, now you can take a shot at your tier 1 lenders, okay? And these are some of your best, most respected banks in the industry. And they usually won't touch you until you've already gone through the tier 3 and the tier 2 lenders. But once you've done that and you've built a sizable credit limit profile with your tier 3 and your tier 2 lenders, well, then you're going to qualify for more of the tier 1 lenders. And these are the specific lenders that I help my clients establish, build, and grow relationships with over time. So you get to the point where your credit is working harder for you than you are working for it. You get to the point where lenders are chasing you with offers than you having to chase them down and present yourself and pitch yourself and then wonder why they don't approve you because they won't give you an answer why. This is exactly what we help our clients get. At this stage, once you get the tier 1 lenders, now you build those accounts, you're really maximizing value. So stage 1 is getting started. Stage 2 with tier 2, it's really starting to add strength, okay? You're building that durability, you're building that endurance, you're starting to become in more credit shape. Well, tier 1 is where you really start to perform. You've got the best banks in your pocket, which will lend so much credibility to you whenever you go to another bank and you try to apply for financing. They'll see these relationships built. You'll be approved so much easier than you did if you were still at the tier 3 or the tier 2 level. So once again, benefits of a good credit score. I think we all know this. This is common sense. Everything you do will be less expensive when you have good credit, from getting an apartment if you're applying for a rental, to purchasing rental properties with your mortgage process. You get better insurance rates. I mean, everything is so much easier when you have good credit. When I first started, I thought, I don't need credit. I'm going to do everything with cash. I'm going to buy all my properties cash. And even though that sounds great, you could borrow $5 million with good credit. And trying to come up with $5 million in cash to stack up would take a lot longer. So do yourself a favor, leverage the system and the tools that are given to you here. I know school doesn't teach us about this, but it is available for us to learn on our own. And through good teachers and good people around you like myself and others, you can learn this and really apply this and then utilize it for your life. Again, how do you get a good credit score? Pay your bills on time, keep your DTIs low, pay down your credit cards, and then remove inaccuracies on your credit report. And if you're looking to get money for your business, if you want us to take a look at your credit to see if we can enhance it and grow it, or you may be even qualified for our funding programs, go to nationalcorporatecredit.com, go ahead and click apply now, and I look forward to speaking with you.